All right. Hey, everybody. Welcome to Tom's Trading Room. Glad to have you here. It's Tuesday. I typically do these on Monday, so I apologize for coming in a day late, but glad to have you all sitting in with me here on a Tuesday morning. It is just after 10:30, August 31st, last day of August. What does September show for us? What's going on with the overall markets? And most importantly, what's going on with all of you? Glad to have you here. Before I begin, let me go ahead and share with you real quick my plans. So today I want to talk about overall market view. I want to look at stocks. I want to look at cryptocurrency. Cryptocurrencies made a bit of a move to the upside here in the last 24 hours. We'll definitely take a look at it. I want to talk about Robinhood stock. Okay, so I dipped my toes into Robinhood yesterday afternoon. And the water was deeper than I thought as the stock started to plummet. But I've got a trading strategy I want to share with everybody here on Robinhood. And then finally, we're going to take a look at what's cheap and what's expensive. And then we'll take a look at how to trade that as well. So once again, glad to have you guys all hanging out here with me. Let's go ahead and get going. Before I go any further, put big screen up. And I do this at every one of my webinars that I host, and that is this disclaimer. I want to put it up on the screen. I'm not going to spend any time on it. You can read it in its entirety. All you got to do is just pause this stream. You can pause the stream and get right back to it. If you're watching the recording, you can pause the recording. Two quick things: stock options and crypto trading have large potential rewards, but also large potential risk. And number two, I'm not your money manager. I'm not your investment advisor. So I'm here to show you how it is that I spot these opportunities in the markets. So once again, glad to see you guys all here. JP, Willie, RP, glad to see you in the room. Guys, if you want to take a look at we'll get to that morning report in a moment. If you want to take a look at your favorite stock, then feel free to let me know about it, and we'll take a look at it as well. I'm going to start off real quick with Robinhood, and we're gonna bring this up again. But this is the intraday chart of Robinhood. This was yesterday as it traded into a tight range until guess when? 10 after 3. We dropped below the low, and we proceeded to drop all the way down into the 42s. All right. Woke up this morning, and we saw the low at 41.51. That was a quick stab. Since then, we've been trading above the 42 half level. We'll see where this ends up, but I think this is going to be the area that's going to be the tight spot for the day. All right. What I mean by that is that looks to be the range for today. Is even though we've got this low down here pegged at 141.51, that snapped back pretty quick. All right. I really see somewhere around 42 half or so as the low for the day, and then the highs for today is really going to be about close to just under 44. So that's the range that we see Robinhood trading in right now. If I bring this up on the screen, make it a little bit bigger, you kind of get an idea of really just the continued churn that started late this afternoon. Why is Robinhood down? Robinhood is down because of gamification, as it's called, and the fact that now the Congress wants to put a tamper on these so-called gaming apps that they're calling Robinhood, Webull, and a lot of the newer platforms that are out there right now. I think overall, this is probably a good thing, because what's going to end up happening is it's going to be more beneficial to the consumer, because a lot of people think that when you're on Robinhood, it's a free app, and that you get commission-free trading. And while that appears to be true on the surface, right, what's going on behind the scenes is that your trade, what's happening is Citadel with Robinhood, Citadel, who is executing and filling the majority of his trades, is getting a peek at what it is you're doing, can jump out there and trade ahead of you and then put your order in. And although they are supposed to improve your trade, they're not improving it as much as they could be. And so basically what's happening is that your free trade is actually costing you money in execution. All right. That's the big thing that's happening right now, and why they want to take some of this game theory away, where, when you take a trade, you get all these balloons popping on your screen. Yay. Congratulations. And it seems to maybe induce more trading. All right, I think the word's still out on that. But we see that is causing a negative reaction to Robinhood's stock. Now, let's take a look at it against a couple of other ones. So if I were to look at IBKR, that's Interactive Brokers. What's Interactive Brokers been done since yesterday? So Interactive Brokers is slightly down, but if you take a look at it, here's the afternoon move on IB. So IB was trading at 64.90, and then it dropped throughout the rest of the day and dropped down to 64.40. So there was a 50-cent move to the downside, and this is a $65 stock that moved 50 cents, right? Where Robinhood was a $45 stock that dropped all the way down into 43. So where Robinhood made about a 5% drop in the last hour of the day, these guys made a maybe a little bit more than a 0.5% move. Okay, so that's just a way we could look at it. AMTD, all right, TD Ameritrade, another one. How did it perform? And of course, this is very interesting that I cannot get TD Ameritrade's stock up on the Thinkorswim platform. SCHW? How about Schwab? How about Schwab? Can we get Schwab? Yeah, Schwab came up very quickly. Now, Schwab, which is a set, boy, I remember when this stock was trading for $10. That was 10 years ago. But take a look at what happened with it come 10 after 3, where it dropped from $75 down to close at around 73. Again, it dropped 2 points, but the stock's trading almost twice as much as Robinhood. But today, it's dropped off a little bit as well. It's down 1.4%. Schwab is a little bit of a different character, and so much that it, and this is my opinion, it was overvalued when you look at it. When you look at it, comparing it to all the financials, right? And that we might be getting a little bit of pop based on that big drop that happened yesterday, but a little bit overvalued, a completely different scenario. So what I want to do is I do want to start with looking at the stock market, looking at overall stocks. So again, I'm going to break this live stream up into 3 different parts, okay? With the first part being our market overview. So let's go ahead and talk about market overview. We're going to look at stocks, we're going to look at crypto, and then I'm going to look at some of the ones, and I'll try to get to as many of them as I can when I'm going to take a look at your chats, and we'll see what things look like with you. The charts I'm going to be using today are on tomsoptiontools.com. Now, free 2-week trial if you've never used it before. But the reason I wanted to bring that up is that we're going to be looking at charts, and we're going to be looking at the candlesticks, which you see, which is the actual stock chart price. We're also going to be looking at these red lines. This red line is implied volatility. Been getting very cheap as of lately for several stocks in the overall market as we enter into the month of September. September, especially next week, all right, we get to the end of next week, things start to get a little bit dicey, as mid-September to mid-October is typically the time in which we see volatility rush in. If volatility is going to rush in, then typically people are exiting the building in terms of stocks and other assets. Okay, so that could be, we could potentially see a slight correction. But again, and I'll show you the basis of why I believe that here in just a few minutes. This is the S&P 500 I'm looking at right now. I actually have a 60-day chart, as you can see, starting at, in fact, if I bring up, let's make it a 75-day chart. That puts us into really the beginning, the unofficial beginning of summer. And you can see the low was at 405, and you can see also that the highs kind of clocked in today. All right, we're getting highs again. Is that today? Let me go ahead and bring up my latest chart. Yeah, we're getting a little pullback today. Not much of one. It's very sleepy. This is a sleepy week, guys. This is a week where everybody's going to the beach. You know, the Hamptons are going to start to experience a lot of folks in the city, but you got these higher lows that have happened, and you've got these higher highs just coming off of all-time highs once again yesterday. If you join me on these sessions week after week, the last couple of weeks we've been talking about the pre-Labor Day bull. And, we've been talking about this for the last couple of weeks, going back into around mid-August. So here's some areas right around 440 on average, and now we're trading up above 450. So anyone who's trading that pre-Labor Day bull has been doing pretty good. I actually did it with the QQQs, and I'm in the Qs right now, trading Qs and Q options to the bull side. My plan is to exit that trade. I'm going to exit half of it. Actually, no, I'm going to exit the whole thing by Friday. So I'm going to get out a little bit ahead of everyone else being everyone on Wall Street. And then I'm going to start to trim positions going into next week in terms of my longer term trades. But here you go. So this is the S&P 500. And if we were to look at the options on this, options on the S&P 500, if you look at that number, that 16, that represents the implied volatility that was going on in the market just 2 weeks ago. We're down to just above 10. So that is a considerable drop in terms of options. All right, if you're a call buyer or a put buyer, you're getting options on the cheap right now compared to where they were just 2 weeks ago. TLT. All right, so what's going on with the bond market? Not much of anything. In fact, if we were to take a look at bonds, look what's happened here. The lows have gotten higher, but the highs have gotten lower. So the bond market is consolidating. It's consolidating right around that 150 level. What is going on with bonds? It is my belief that we're going to see the bond market start to break one way or another, and it could be another couple weeks until we get another Fed meeting coming in, and we get that big aha moment of, are we going to taper? Are we not going to taper? And I believe that's going to push the bonds to either new highs or lows, what we call monthly highs or monthly lows. Right now, bonds are sitting quiet as we head into the Labor Day weekend. The cash market, U.S. dollar, has come back a little bit, but not much. It's still on the highs of summer, suggesting that maybe not stocks, but foreign currencies are easing a bit compared to the U.S. dollar. USO. All right, so let's talk about oil for a moment. So up here, when we were hitting this triple top, I was looking at the oil markets. I was looking for oil to be soft. And we did get a jump up because this move happened. I expected us to get down in the mid 40s, but not until October. All right, not until even the end of October. October 15th was my projected date. We got down there a lot faster. We got down there, literally happened in a couple of weeks. Because of that move to the downside, we did get the bounce because this move down happened far too soon. You got a bounce. Add in the fact that Hurricane Ida caused part of this move to the upside. And as you can see here, it looks like the oil market is starting to fizzle out a little bit. We might see that drop down a little bit more. There's one more I want to look at too, and that is UNG, United Natural Gas. So take a look at UNG, and UNG did the same thing. It had a pop-up, okay, so this was Friday, Monday, and here's today. And even UNG is coming off of its highs as well. I expect to see UNG drop much faster than crude, although I do expect to see the entire sector come down and move lower. All right, so let me go back to my list once again, and I'm going to catch us up because there is one big chart I want to look at, and that is, it's not gold, although we're going to look at gold right now. So gold had highs, summer highs above 178 for GLD. Summer lows just a few weeks ago down here just above 160. Where are we at right now? We're coming up into an area that I've been talking about for the last week or two, and that is the 50% retracement level from this high to this low is coming in right now at around 170. We're getting dangerously close to that area, all right? I would say a close above 171, and gold is off to the races again. I'm a long-term holder of gold in GLD. I'm not so much a short-term trader, although I am continuing to sell puts on GLD. Anytime I see big drops like this occur, we get a couple of days down in a row, I like to go out there and sell some premium and possibly pick up some GLD. But I haven't been able to do that the last couple of weeks. And so I think the last time I had a chance to do that, maybe it was 2 weeks ago. Have not done anything in GLD this week. There just wasn't any premium for me to go out there and grab. Again, this is getting quiet too. All right, this is really a week where if you want to take a week off, this is the week to do it. So that moves me into VXX. All right, that is the VIX. VXX is the VIX futures or options on VIX futures. And so as you can see here, remember that adage, when the VIX is high, it's time to buy. When the VIX is low, it's time to go. We are getting low again. We are getting low once again. We had lows down here at 26. We're trading right around 25.75. This is an area where if we could get up a little bit, notice the volatility on the VIX. Now, you might say, how can I have VIX and volatility? These are the options. The red is the options on the VIX. So notice when the VIX pumps up, vol pumps up as well. That means option premiums pump up. When the VIX is low, that volatility is also low. But this is interesting. We're sitting down here near lows for the year, and yet we're starting to get a little spike up in volatility. That might suggest that it might be time for the markets to turn and correct a little bit. So for me, if I'm a put seller, and I like selling puts in gold, and I like selling puts in stocks, maybe selling puts on the VIX would be a great hedge to selling puts in the stock market. Absolutely. It's absolutely something that I'm looking at. VIX is low, it's time to go. This is another setup that's telling me that we get past this Labor Day weekend and we start looking at potentially what's to come. We could see some potential spikes like we've seen earlier on this year. So that's VXX. All right, let's talk about some stocks. I want to get into cryptocurrency, but before I do, let's talk about Riot Blockchain. Riot Blockchain, this is a stock that moves with cryptocurrency. As you can see, Riot actually had a decent earnings report, right? Their last several earnings reports were not up to snuff, but they actually had a decent earnings report, and therefore Riot Blockchain is close to its summer highs. Now, it's not close to its all-time highs, but it is close to summer highs, and where Bitcoin goes, this will follow. Now, the one thing you need to know about Riot Blockchain is when Bitcoin falls, this thing falls a lot faster. When Bitcoin goes up, it doesn't go up as fast. The only way this one's going to go up extremely fast is if Bitcoin gets back above, I would say it has to go back above 63,500, all right? That's the closing high for BTC. We get above that, and then you're going to see this thing go alpha, and that means it's going to be making some huge, huge moves. So if you want a stock that moves with Bitcoin, and you're willing to suffer through the days where Bitcoin might go sideways and this one goes down, then Riot Blockchain may be for you. If not, if you want a little bit of a mix of all cryptos, then perhaps Coinbase makes the most sense. Coinbase had some fantastic earnings that came out a couple of weeks ago. The stock dropped, but it wasn't so much based on earnings. It was based on cryptocurrency, where we were up above around the 50,000 mark not that long ago, and we've dropped back down. We were down in the mid 40s. And as of, as of right now, and I'm going to look at it right now, I've got Bitcoin pegged at around 47,500. Which is where, if you look at where Coinbase is right now, trading around the 260 level. Coinbase has come down, and this triple bottomed back here in May, June, and July, down below the 220 level. And since then, we've been seeing higher and higher lows. So this is an interesting one that you could look at as well. Both Riot and Coinbase are optionable. All right, so you could look at options on the two. And if we were to take a look at options on Riot, let's see what I can do here for you. Let's pop on over and take a look at RIOT, and let's update this. So what I do know about Riot Blockchain is it does have weekly options. Options expire this Friday, next Friday, third Friday, September 4th, etc. So if I were to go in and maybe look at, for instance, a 2-week view, looking at the options that expire on the third Friday of September. Why do I like third Friday options? Because they have the most strikes and they have the most liquidity. That means the bid and the offers are the best because these are the monthly options, and the ones that trade on third Fridays typically have the most volume in them, right? They were the original. These are the OGs of option trading, was the third Friday options. Let me update this, and we'll take a look and see what we're talking about here. So Riot trading around $37.70. That means the at the monies. Those are the 38s. They're trading right around, I want to say, about 8% of the stock price. So you would need this stock to get above 41 by September 17th to be at break even. Look at the volatility. That is going to be, if you take a look here, the IV. This thing is in the 90s and 100. This is huge. When you look at this and you compare it to the VIX, remember the VIX is trading just above 10. That means that Riot Blockchain's options, based on its stock price, are trading at 10 times the percentage value, roughly 9 times percentage value of the overall stock market. So they are expensive. Okay, so they're expensive. Puts are the same way. The puts are also. So, if I'm looking at this and I want to be an owner of Riot Blockchain, maybe selling those puts might make the most sense. All right, but again, it is a Bitcoin play. Same thing with Coinbase. So I wanted to share just a little bit of that with you here as we look at these stocks. All right, so that brings us to AMC. I cannot get away from what's going on right now with meme stocks. AMC double bottom. Forget this big move off of 10, and 12 that moved all the way to 70, and then the preceding drop to the downside. We dropped down to, let's call it 30, once, twice, 3 times, and now we're starting to make the move up. And nobody in mainstream media is talking about this right now, that AMC is at highs that we have not seen since July, since the thing started dropping out. Earnings are in 62 days, so it's not an earnings trade. This is possibly a quiet move higher. The other thing I want to mention is, you want to know why I think it's quiet? Look what happened on the jump up as volatility got up here around 500. Okay, so volatility is in the 170s right now, but it's not trading at 500. It's trading at lower levels than where we were during earnings, and at much lower levels than where we were during the drop, as well as the preceding move higher. So I'm not saying these options are cheap. I'm saying that right now it looks as if AMC is going to have a closing high if it closes right where it is today, and then all the meme traders are going to catch on, and they're going to want to push the stock higher. How do you trade something like this? If you're not going to buy the stock, then you could sell put options on a potential move higher. The other thing is call spreads might make the most sense here too. So this is something I wanted to share with you guys. That's AMC. How about GameStop? Same thing's going on with GameStop. So the meme traders are moving these things. You know what's going to happen? You're going to hear about this. If you don't hear about it today, you're going to hear about it this week. As this thing closes and creates some closing highs, and all of a sudden we've got $220 right now as a move for GameStop. This is something that's tradable. I don't think it's something that's investable in, right? So just wanted to point that out and get that out there. And finally, this is where I want to. I'm not going to end on this, but I'm going to talk about Robinhood, because Robinhood, interestingly enough, let me reset this real quick and see if we're dealing with any new numbers. HOOD. So Robinhood, what you're seeing on my chart is the chart since the options started trading. All right, remember Robinhood was trading a week or two before that, and then the options came in, and that's why you saw a big jump up. And then we've seen the preceding move lower, and here we are bouncing off of fresh lows. These are fresh lows after the options were traded. Fresh lows trading down here. The low was 41.51. We're at 43.20 as of this particular chart here. I'm going to show you a delta neutral trade that I showed some folks. That I was showing some folks earlier this morning, and want to share it with you guys as well. But a little delta neutral trade here in Robinhood, taking advantage of this high volatility that's going on out there. Before I do, two quick things. Let's first pop on over and let's look at cryptocurrency. I'm just going to look at two cryptos. You know which ones I'm talking about. I want to look at BTC and I want to look at Ethereum. And there is a big difference between the two. So let's start with BTC. So let me bring that up on the screen and I'm going to blow it up on the chart here. Let's see. Candlesticks are on. And I don't really need to, do we really need to look at a 150-day chart of BTC? No. I think a 50-day chart is going to be sufficient. We all know what the high was. We all know what the low was down here at 29,000. But this is what we're dealing with right now with Bitcoin. So BTC moving higher. As you can see, we've had consolidation for the last couple of weeks. Right? That bounce up. The fact that these lows are getting higher and higher and higher, this is a good thing. It's a good thing for Bitcoin. The other thing I want to mention is that we're above the 200-day moving average. That 200-day moving average could be a good sticking point as well. We get above and close above 50,000, and it's going to need to happen for more than one day. I'd say 2 days. And then I believe we're back and off to the races again for BTC. All right. The other thing I want to mention is I want to talk also about taking a look at Ethereum. And this is what really gets me excited right now is that if we take a look at ETH, I'm going to put that on the screen right now. ETH, there we go. Look at Ethereum. New highs, new summer highs today. It was the highs but 3480. This thing almost hit 3,500. Big deal. I've been talking about Ethereum being the stronger of the two, and it is confirming my comments by moving up and making new highs today. There's your low down there in around 1,700. You had that climb out that took us all the way up near 34, and we moved sideways, breakout. Is Ethereum going to pull Bitcoin up with it? That's the question. I want to actually turn the pairs on right now, and let's take a look at Ethereum and pair it up with BTC. You can see what's going on with it. So looking at the pairs over the last 50 days, this is what it shapes up to be. Ethereum prices on the left, BTC prices on the right. Ethereum is the colored graph you see here, greens and reds. All right, BTC black and white, so we can distinguish the two. Notice that they ran pretty much lock and step up until August 1st. August 1st came around, BTC had a little pullback while Ethereum moved higher. They started to widen out. Okay, they got very wide here at the middle of August. Then they started to come back together. But since then, we've been pushing apart again. And I believe one of the only reasons Bitcoin is trading higher today is because of that move with Ethereum. So I do believe if Ethereum makes new and higher highs, that some form of arbitrage is going to come in. And there's going to be some folks buying Bitcoin simply because of Ethereum moving higher, because they do tend to move together in some point in time. All right, so that's cryptocurrency. All right, so let me take a look and see what everybody out here is talking about in trading. So good morning to all of you that are hanging out with me today. Florida beaches, RP. I'm actually in upstate New York, and so that's where I am for the time being. I took the big truck, took the wife, took the kids, took the cats, and got in that 26-hour drive. I'm still feeling it. I did it late last week. I'm still feeling it today. That was a tough ride. Let's see what we got here. Rizwan, is it ZOM or is it ZM? Let me just look at both for a second, because I've never heard of ZOM. And apparently it doesn't trade options if there is such a thing. But I'm going to mention, I guess maybe we're talking about Zoom. So ZM is what we're looking at here. Zoom. So Zoom, again, earnings came out last week. We had a big drop down. This thing dropped down into the 290 range. Volatility's drop is still a little bit high. This is that. This is not the, what do they call it? The reopening trade. The reopening trade, I do not believe is going to reopen. The earnings were better than expectation. Maybe their forward outlook. I was not on the call, so I don't know what caused Zoom to drop as much as it did. But I would not be trading this one until I see what happens tomorrow or the day after tomorrow and see what happens off the reaction from this huge gap, this 50-point gap that happened in Zoom. If it starts to move higher than today's highs and try to attempt to fill that gap, then I will be all over this one as that looks like it discounted itself quite severely. But if it starts to move lower off of that, then I'm gonna stay away from it. That's my thoughts on ZM. All right, QQQ. Well, I'm bullish on QQQ, and I have a position on QQQ, and I'm expecting to stay in that for the remainder of the week. And then from that area, then I'm going to probably pull out and go sideways. That's just my outlook on Qs and on everything right now in the market is continue to move higher into Labor Day, as we discussed, and then we just see where we go from there. Nelda, good morning. Carlos wants me to take a look at, let me throw it up there on the screen. Carlos says, hey, can you take a look at Goldman Sachs? GS, let's take a look at GS. And to do that, we're going to type in the symbol GS right here. And what I'm doing is I'm doing a focus today on the stock and its option volatility, because the option volatility can tell us a lot about where the stock may be interested in going. There's been a big focus on financials, and a lot of financials just haven't got up and gone anywhere. Goldman Sachs is not one of those. It has gone up. It has made new highs for the summer, new highs for the year. It's come off the highs at 420, trading down around 410 right now. This is kind of expected if the market's going to have a little pullback like it is today. I would expect if we tighten, if they start to taper, that's actually going to be good news for stocks like Goldman Sachs, all right, on the fundamental side. On the technical side, I don't see anything on here that's giving me any kind of a buy ranking other than the fact that the trend on GS is still up. All right. Good morning, Napoleon from DC. Good to see you there. Silver as a trade for, James wants us to look at silver as a trade for gold. So how about we just look at SLV? And so I can do this, James. I can type in, let's go ahead and look at SLV. And I'll put SLV on the screen. And then more importantly, as you can see here, SLV, it looks to me right now like this one has dropped out quite a bit more than gold. The one way we can find that out is let's pair it up to GLD. So for the stock symbol, I'm going to type in GLD as a pair. And let's look at the pairs together. So the pairs together, in fact, you know what I want to do? I want to turn the overlay off so that we're just looking at the stock chart itself. All right, there you go. So, as you can see, silver has dropped out significantly. These two were running pretty tight. They were running together. And then back near the middle of July, silver dropped off while gold went sideways. And then when gold made the drop, silver really made the drop. And again, gold made that comeback, but silver just hasn't moved back as much as gold. So, as you can see, they were much tighter together at the end of June and mid-July. And from the fallout, GLD fell, or SLV fell a lot more than GLD. Now, that being said, if you like to trade pairs, if you're a spread trader, then buying silver against GLD, buying SLV as on a ratio and selling it to GLD might be a good idea if you believe in the rubber band theory. When the rubber band theory is that as these pull apart like they did, they're likely to snap back together. So again, I'm not your investment advisor. I can't tell you what to do. But when I'm looking at this and I want to trade a ratio, what I do is I look at the price of GLD, all right, 170. I look at the price of SLV, which is 22. And then I'm going to take this very expensive calculator here, which has me and my wife on there. And I'm going to go ahead and pull the calculator up. This is what I'm going to do. I'm going to say to myself, 170 divided by 22. I'm just rounding these. So what I get is 7.72. All right. If you want to round that up to 8, that means that for every 1 share of GLD, I would need about 8 shares of SLV. So if I were going to buy SLV and I bought 8 shares of SLV and I would short 1 share of GLD, I'm creating a zero cost hedge, right? Buying the one that's a little cheaper, and I don't mean cheaper in price. I mean cheaper because it dropped much more. So what we're trying to do is we're trying to spend dollars. The dollars that we spend on SLV, we would short in GLD and then have a trade that is zero neutral. Now, how do you equate that into options? A little bit more complicated, but basically, if I were looking at buying call options in SLV, I'd need to buy quite a few more calls in SLV to equal 1 put in GLD. All right. A lot to talk about there, but I wanted to just bring that in and let everybody know what it is that I'm looking at. All right. So one more. I'm going to give you one more, Jim, and that is Mara to Riot. Let's take a look at that. So to do that, again, I'm going to go in. I'm going to type in MARA, and then I'm going to also compare it to Riot, RIOT. Okay. We actually have ways of looking for these pairs and trying to determine if there are tradable pairs where I get a flash and I say, oh, buy Microsoft, sell Intel, buy this, sell that. Based on exactly what we're doing here, we gauge, again, these stocks and how far apart they get from each other before they drop back to their mean. And that gives us the idea of what's worth buying and what's worth selling. Now, you want to take a look at Mara and Riot. They're literally trading lockstep, and they've been moving up and down together. Except in the last couple days, look what Mara's done. All right, Mara's jumped up and Bitcoin's gone sideways. So Mara is definitely the strongest of the two. But then again, I would want to look at the distance between the two of these to get an idea of is there potentially an arbitrage play here with the two. So again, thank you very much for that comment. How about MasterCard? MasterCard, you know what? I traded MasterCard, and that has not been a fan favorite of mine or a lot of people these days. But let's take a look at MasterCard. And to do that, I'm going to turn off the pairs, and I'm going to go in here and look at MA. So I did a couple of things with MA. More recently, I've been selling puts on MA, and it's going to be interesting to see if my puts are profitable. I sold puts on MA a couple weeks ago, and I'm at the 350 level. So as long as we remain above 350 by Friday, then I'm going to be just fine on this particular trade. But if I were to overlay one thing, and then that is why did I jump to selling puts? Well, this is why right here, because if you take a look at this 7 to 30 day implied vol, and you see what happened with MasterCard, right before those earnings came out. This thing was trading up here in the 30s and it dropped down in 20s. But once again, still a little bit higher than normal. Even taking that spike out, it was still trading on the high side of IV, even just a couple of weeks, a week and a half ago. So I sold these 350 puts, when the stock was trading well above it. It has dropped down, but as long as we don't crush through that 350 by Friday, I should be just fine. The other side of that is I've had positions like call spreads on that have dropped in value. Okay, so at the end of the day, where does MasterCard go? And that we have to go back and we got to look outside of the 75-day window. We got to go out there to 100 days and get an idea where, really the bottom it's sitting on an area that I think is a very good value area right down there around 355. Notice what happened after earnings. The stock was up here near the $400 area, ran down to 355, back up to 395. So if we go from 400 to 355, and then we go back up to 395, then 350 should be that support resistance low. I wonder why I picked the 350 puts. That's why, right there. Okay, and I will be going out and selling more of these. I'm going to roll out of these things on Friday, win, lose, or draw, and I'm going to sell some more puts on MasterCard. Might have to go with a lower strike if we do, depending on where we are. in terms of where the stock is on Friday. That'll help me determine whether or not I'm going to go out there and do something more with it. All right. So that being said, guys, let's go ahead and jump into the second part of what I want to cover with you. And that is, let me bring it up real quick, trading Robinhood. So trading Robinhood, this is an interesting one. I'm going to actually bring up the real-time screen, and let's bring up the hood. And here's the hood. And the hood is running today. Now, yesterday, I dipped my toes in the sand, and I'll tell you what I did. I sold some puts. I'll tell you what I did. I sold 45 puts yesterday. All right, right here. I mean, literally, I'm selling the 45 puts right here on this low. And then this happens. And then this happens. I'm like, okay, I'll sell the 44s. So I sold some 44s. And then this happened. And then I saw this happen today. I'm like, wow. Okay, you know what? We're only talking about something that's gone down a couple of points. This is not, this isn't breaking the bank for me. I'm going to hang into this trade, and we'll see where this ends up going. But at the same time, I started to look at potentially something else. And that was, what if we're looking at potentially an iron condor, or an area where we're going to range bound for the next couple of days? So what I was looking at with Robinhood was taking a look at potentially the options and creating a trade off those options. And if I type in HOOD, all right, and then let's just update it with today, so you kind of see what's going on with this thing. And you can see, the big point when I look at these options, and here's the options right off of our software. So what's the most important thing to me? It's not so much the strikes or the expiration dates. It's the IV, which are trading like absolutely crazy. Now, when you see a 113 and a 153, that just tells you these are in the money, and they're pretty wide. So I want to go down to these at the monies. They're trading in the 90s, expensive. The bids and offers are pretty close together. That's great, because if I'm going to do a spread trade, I want to make sure those bids and offers are together. But I can see that, we're looking at about $2 on the calls and $2 on the puts. So this thing right now, the actual straddle, you're seeing about a 10% wide move. So this is expected to trade 10% up and down between now and Friday. We're looking for 10% moves. We can utilize that 10% move and actually create some very interesting trading opportunities from that. So if I were to take this trade, and let's say the trade's at around that 10%, and we look at, say, the 40s, all right? So where is the lows? Let's say the low is at, and we were looking at, I was actually looking at the lows around the 41, 42 area. So today's low at 41. So if we were to sell the 41 put, right? And then, that you're going to bring in about $1.20. Now, if I bought the 39 and I paid 70 for that, that's about 50 cents. That's a 50-cent trade right there. All right, the 39.41, 50-cent trade. So you're basically, it's $2. You're bringing in 50 cents, but you're risking $1.50. Right? Can we bring in some more premium? Where can I bring in more premium? What about the call side? So that's a bullish trade just on its own. But if I were to go over here and say, all right, you know what? That 45, what if we sold the 45 and I bought the 47s? What can we do that for? About 50 cents as well. In fact, if we put that entire trade together, that trade is coming in just under $1 right now for a credit. So let's take a look and see what that consists of. That consists of buying. Now we got a put spread and we got a call spread. Buying the 39 put, selling the 41 put. That's a $2 spread there. We're going to get 50 cents for. Selling the 45 call and buying the 47 call for protection, also bringing in almost 50 cents. So what you're looking at here is, if I were to just shove this just a little bit higher, right? If I could get $1 for this trade, then I'd be bringing in $100 for this trade, and I'd be risking $100. So this is a 1-to-1 reward to risk ratio, right? I'm making $1. I can make $1, but I could lose $1. My maximum is $1 in. My maximum risk is $1 out, right? And what am I looking for the trade to do? Absolutely nothing. If it just sits right inside here, if it just sits in this area here, and it doesn't, my break even is going to be 46 to the upside. My break even is going to be 39 to the downside, or $40 to 46. I got a $6 window here, right? I got a 15% window of break even on the stock. As long as it's below 46 but above 40, I'm making money on this trade come Friday. Again, it is an iron condor is what this is called. And you can see here exactly how the trade's put together. What are we buying? What are we selling? All right, so how do we determine break even? You take the dollar credit that you're bringing in, you add that to the buy strike, the 39 put, so 39 plus $1 is 40. That means we got to be at above 40 to make money. But we also have to be $1 below the high strike, so 46. So as long as we're between 40 and 46, this trade makes money, right? It's also put on as a one-ticket trade. That means you can enter it as a one-ticket trade, and then you can also exit it as a one-ticket trade. If you were to get, depending on the broker, right? If you're using like a Schwab or a TD Ameritrade or an Interactive Broker, a TradeStation, those guys can do iron condors as a one-ticket trade. You just throw the whole thing in as one order, and you either get filled or you don't get filled, right? Now, the other thing that I want to stress about a trade like this is that this is a trade I would not throw in as a market order. Absolutely not. Absolutely not. This is a trade that I would look at as a limit order. I would look to do this as a limit order, and I would put in what my limit is. That way, worst case scenario is I don't get filled. Okay? But that's, again, what I like to refer to as an iron condor. And I thought I would throw that out there for all of you to get an idea of what I'm looking at when I look at high volatility. So let's move to now, I'm going to call this the third portion, the third and final portion of the live stream that I'm doing. And that is the expensive and cheap options. What else is out there that is expensive that we could sell? What else is out there that's cheap? What's out there that's cheap that we could go out and look at buying? Because that's important as well. Okay? So let's pop in and take a peek at what's going on here. So I have something called the morning report. I want to share this with everybody real quick. All right, so if you want access to exactly what I'm talking about, these cheap and expensive options, and oh, by the way, 4 other reports you can get every single day, then consider adding the TG Suite to your suite of apps. I'm actually going to change the name on this one pretty soon, but right now it's called TG Suite. It's available on the App Store on Apple and the Google Play Store. So if you were to take this expensive piece of equipment here and you were to go and download TG Suite, go ahead and do a search on it, TG space Suite, and you find it, you download it, you open it. If you are a Tom's Option Tools member, you just simply log in with your username and password. If you are not, that's okay. Down below the login, you'll see non-subscriber login. Fill that information out there, and you'll then see this piece right here. And this piece right here is going to show you a bunch of different buttons. All right, these are all premium buttons at the top. But the one that I'm interested in you looking at is the MR, Morning Report button. You click on that, and it's going to open up these 6 different lists that I look at every single day. I'm going to look at cheap and expensive IV right now with you. So let's take a peek. All right, so I also have this available on our tools. For those of you that are Tom's Option Tools members, if you go to Options and you go to Rankers, then down at the bottom of the Rankers tab, you're going to see something called the Morning Report. And that's going to give you exactly what it is we're looking at, cheap and expensive. And we've got all the other ones too. So cheap and expensive. Let's look at the expensive. That's on the left-hand side. CP, that's Canadian Railways, I believe. Look at the way we rank these is we look at the implied volatility. Now, we have our own special way of calculating these. So we basically take all the near money options and we take options depending on, in fact, I think we're looking at 7-day to 140-day to expiration options. We clump all those together. We get an average of those, and that gives us each day we get a number, and we tag that number. And as that number goes higher, that's high volatility. As that number goes lower, that's lower volatility. What we do is we timestamp the high for the year and the low for the year, and then where is it right now? Take a look at CP. The high for the year, 38.41. The low for the year, 22.18. And it's currently at 33.02. So that is an expensive option. JO. This is the ETC, I think, or ETN for coffee. A cup of Joe. Coffee. I got mine here. It needs to be reheated. 66 on the high, 31 on the low, 49 currently. You know why? Let's go ahead and click on it, and I'll show you why. Look what's going on with coffee. It hit a high back at the end of July, pulled back, but look what's been happening. Commodities, guys, are going back up again. All right, so we see that happening right now with coffee. Then there's some Chinese companies out there. KWeb is Chinese company. CWeb, these are power shares. And then you've got down here at the bottom, Alibaba, which I have traded. I sold puts on Alibaba last week. You want to know why? Look at that line right there. That's why I sold puts on Alibaba. When everybody was saying that Chinese stocks were no good, that they're going nowhere but down. And that might be the case. But you know what? I want to be the guy that steps in front of everybody buying the hurricane insurance on Alibaba, and I want to be the seller. And I sold some really good, expensive options that are a lot cheaper now. They've dropped back down. And I'm looking again to see if this is going to pop up again. I don't know if we'll get this kind of move because all that action and all the news was centered around China. And you know what? I believe I got close to pegging that low. And that was part of it as well, that they did really well. But I'm telling you, these things were super high. When you look at, middle of August and the IV is at 35, and all of a sudden now we're toward the end of August and it jumps to 65, that means those options were worth almost twice what they were just a week ago. All right? So that's something to look at as well. Now, if you're not an option seller, and it's fine. Selling options, you need some more capital to do that, okay? If you're going to sell puts, for instance, or sell calls, you need a lot of these. You need a lot of these, guys, okay? You need lots of those. But if you want to do it with small amount, then what you need to do is you need to do credit spreads. And credit spreads allow you to do that. Credit spreads allow you to go in and sell that volatility, that out of the money put, and then you just buy a further out of the money put for protection in the event that you're wrong. And you let that and your idea is to let that expire. But if you want to avoid all that and you're just a call or put trader, then let me share with you what's on the right-hand side of the screen. The right-hand side of the screen are options that are cheap. And there's a lot of names on here, especially in the top 5. Let's take a look at some, shall we? So Tesla is the first one I want to look at. Let's bring a chart up of Tesla. And you can see Tesla Motors right now. And Tesla is trading now. It's moving higher. It is now above the 720 mark and moving higher ever still. It's like every day there's some good news that comes out about Tesla, and it's pushing that stock higher. But let me tell you what. Look at where these options were. This is back just before summer. When the stock was dropping, the option premium was up here in the 60s. Now the options are trading down in the 40s. It basically means the options are about 50% less from where they were back, or about a third, let's say a third less from where they were back in May, right? And more importantly, they've gone just in the last couple weeks, we've gone from near 50 on the IV down to 40, so they're 20% off. Options are 20% off. Now, they still may be expensive to you, but if you're looking at Tesla making the move back to 800, which it hasn't seen since the beginning of the year, then looking at that 750, 800 or 780, 800 call spreads makes a lot of sense too, because buying out of the money call spreads is advantageous to the time premium buyer. Okay, that's good for cheap options. Cisco, that's a value play. It's not a value play like it used to be. But take a look at what Cisco's done from the low 50s to the high 50s to 60, pull back a little bit. That vol was a lot more expensive. It was trading up near 30 the day before the earnings announcement. And then the day after the earnings announcement and the days following it, it's dropped down to around 17. These options are nearly half the price of where they were just a week and a half ago, right? HRC, Hillrom Holdings. Not anything I trade, but it's come up on the screen. They had an earnings report, and the stock kind of rolled over from there, but had a gap up today as the IV dropped out pretty significantly. I don't know what the news is on that one. I haven't looked at that one. EOG Resources. Here's another one that had higher volatility just a month ago, trading up near 50, now down to 36. They had a good earnings report. That was at 74, dropped down to around 64 before getting a little bit of a rebound. The last one I want to mention is Applied Materials, AMAT. So again, here's another example where back in the middle of summer, Applied Materials was trading around $135 a share on average, and that IV was down here near 30, the low 30s. It ran up to as high as 43 right before the earnings announcement. Now, after the earnings announcement, we went from a low of 125 up to now, it looks like 136.05, but look at that IV. That IV's gone from 42 down to around 31, so it is kicked off quite considerably as well. Okay, so that's it, guys. Any questions, comments, etc.? Happy to go through them right now. And let's see what we got going on here. So, Constantine, good to see you. I see you in here quite a bit. Have an email to watch you at this time in another room. I'm everywhere. What can I say? I'm here right now and I'm live. Okay, so it's 10:30. My Apple Watch says so, and it's the 31st. So I am here right now. It's me. So I apologize if you got somebody else telling you to do something else. But there you go. Let's see. Bond, Teresa, you want to enlighten me on that? Are we looking for a James Bond, or are we looking for bond market itself? We did talk about the bond market. So TLT was what we were looking at in the bonds. Or was there something called bond that was on here? No, I don't see any bond on here. I will mention too, as I'm waiting to see if Teresa's going to comment. Oh, bond, the crypto bond. All right, Teresa, just for you, let's go take a look at cryptocurrency charts. Let me see if I can find BOND in the list. There it is. Let's bring it up. I have not looked at it. And you know what? I don't want to look at it on the pair. I mean, we can look at it on the pair. The pair is showing that BTC is actually trading better right now. The last couple of days, bonds dropped off a bit where BTC has not. BTC is the right-hand chart. That's why you see the 40,000s over here, and bond is on the left-hand side, and that's why you see bond trading at 27.72 today. But still has got a higher low, higher high scenario, and I really think that if Bitcoin and Ethereum especially Bitcoin, can make some moves back above 50,000, close above 50,000 for a couple days. This is going to be the boat that's going to lift most, or the tide, excuse me. Bitcoin is going to be the tide that lifts most of the boats in the cryptocurrency community. All right. So there we go, guys. All right. So I want to mention also on our morning report, if we take a look, and I'll do this in future morning reports, but we also have the ability to look at unusually high call option volume, unusually high put option volume. We also have the ability to look at high open interest. Check out Ford there. Look at a lot of open interest on those options that expire in January 2022. What's going on there? And then highest option volume. Right now, the options that are on Apple that expire on the 10th of September, the 155s, those calls, had someone traded a lot of volume on those here in the last day. So those are interesting as well to look at. But we'll spend some time looking at these in a little bit more detail on a future live cast. All right. So there we go, guys. That is my live cast for today, August 31st, 2021. Thank you very much. Replay for any of you that came on a little bit late. Got the replay will be popping up momentarily on YouTube. And I will be doing, I promise this, I will be doing a video that'll be coming out later this week on what to do with those Robinhood stocks that I talked about a couple weeks ago. The stocks that Robinhood traders are following. I'm going to show you how we can take that list and scan that list and see if there are any potential buys or sells looking at those Robinhood trading stocks. All right, so have a good rest of your day, and I'll see you again here next week. I'll be back on Monday again next week. We'll talk to you then. Bye, everyone.